In a world where technology and sustainability collide, two companies are charting radically different paths, but both could shape the future in ways most investors don't yet fully appreciate. On one hand, we have Everspin Technologies, a US-based semiconductor pioneer delivering magneto-resistive random access memory or MRAM solutions to industries where reliability is not. Aerospace, defense, automotive, and industrial systems rely on memory that survives extreme conditions, handles constant data writing, and never fails under pressure. It's a high-tech, high-stakes niche with predictable growth, but not without its cycles and competitive pressures. On the other hand, Aduro Clean Technologies is blazing trails in environmental innovation, transforming plastic waste, heavy crude, and renewable oils into cleaner, sustainable fuels and chemical feeds. Its revenue today may seem modest, just $44,500 in Q1 2026, but the potential market exceeds $250 billion globally. This is a story of science, experimentation, and long-term payoff, where commercial success depends on scaling pilot projects and navigating regulatory hurdles. The contrast is stark. One company profits in a mature but cyclical tech sector, the other invests in a green revolution with high uncertainty. For investors, it's a tale of stability versus breakthrough potential, and a question lingers whose journey will define tomorrow's industries. It's easy to glance at a semiconductor company and think, memory chips? Seen it all before. But Everspin Technologies is far from ordinary. Unlike typical RAM providers, its MRAM solutions serve environments where failure isn't an option: spacecraft navigating harsh radiation, industrial robots running around the clock, or automotive systems that can't afford a single glitch. This is memory designed for mission-critical applications. And that specialization makes Everspin a unique player in a market where precision and reliability command a premium. On the flip side, many investors might dismiss Aduro Clean Technologies because its reported revenue appears almost symbolic, tens of thousands, not millions. Yet the story here is not about today's sales. It's about early-stage commercialization and technological traction. Aduro is building infrastructure, scaling pilot projects, and proving that plastic waste and heavy crude can become sustainable fuel and chemical feed. The small numbers mask enormous long-term potential. The paradox is compelling. One company offers a stable foothold in an established but cyclical tech industry. The other chases higher war breakthroughs in a sprawling $250 billion environmental market. Understanding these companies requires peeling back surface numbers and looking at innovation, market positioning, and the strategic steps each is taking toward future growth. This is where the story and the opportunity really begins. At the heart of Everspin Technologies lies a specialized memory solution known as magneto-resistive random access memory. Unlike conventional memory, Mr. M thrives in environments where heat, vibration, radiation, and continuous data writing can destroy ordinary chips. This makes it indispensable for industries where failure is not an option. Think satellites orbiting Earth, defense systems monitoring critical threats, industrial robots assembling high-precision products, or advanced automotive electronics managing autonomous driving functions. Everspin's revenue model reflects this focus on mission-critical applications. In Q3 2025, the company reported $14.1 million in total revenue, representing a $2.3 million increase in product sales compared to the prior year. Product sales now account for the core of Everspin's business, providing more predictability than licensing or royalties. Licensing revenue, including royalties and patents, totaled $1.4 million, a slight dip from $1.7 million in 2024, but far from alarming, as licensing naturally fluctuates depending on contract timing. The company's operational approach emphasizes innovation and strategic partnerships. By expanding the Poised MRAM product family and collaborating with Lattice Semiconductor for FPGA integration, Everspin strengthens its footprint in aerospace and industrial electronics. Its alliance with Quantaris, focused on RISC-V microcontroller architecture, positions Everspin at the intersection of next-generation computing and high-reliability memory solutions. In essence, Everspin's business model combines specialized hardware, growing product sales, and collaborative innovation. Each RM chip sold or licensed serves as a small but critical thread in a web of industries that cannot compromise on reliability, creating a foundation for steady growth despite the cyclical nature of the semiconductor market. Building on its specialized niche, Everspin Technologies demonstrated steady progress in Q3 2025. Though the numbers reveal a nuanced story, total revenue reached $14.1 million, up modestly from the previous year, fueled primarily by an increase of $2.3 million in MRAM product sales. Product revenue is the backbone of Everspin's operations, offering more consistency than licensing, which accounted for $1.4 million, slightly lower than 2024. This small dip in licensing revenue reflects the timing of contracts rather than a decline in demand, highlighting how product adoption drives long-term stability. Gross margins rose to 51.3%, improving from 49.2% the prior year. Crossing the 50% threshold signals greater operational efficiency, likely due to a stronger product mix and higher sales of Poised Mr. M solutions. While GAAP operating expenses increased from $8.1 million to $8.8 million, this growth aligns with strategic investments, R&D for next-generation Mr. M, aerospace, and automotive certifications, and expansion of sales and marketing efforts to support new products. Profitability, however, tells a more complex tale. GAAP net income dropped to $54,000, down from $2.3 million, largely due to a sharp decline in interest and other income from $4.4 million to $1.6 million. Non-GAAP net income, which excludes stock-based compensation and certain known cash charges, fell to $1.5 million from $3.8 million. Despite tighter earnings, cash reserves grew to $45.3 million, providing flexibility to fund R&D, scale product lines, and weather semiconductor cycles. Key growth drivers remain intact. The Poised MRAM family expansion continues to address aerospace, defense, automotive, and industrial markets. Strategic collaborations with Semiconductor, integrating FPGA solutions, and advancing RISC-V microcontroller adoption, position Everspin for future growth. The company balances steady product adoption with forward-looking partnerships, offering a story of cautious optimism in high-tech cyclical industry. Shifting from high-tech memory to environmental innovation, Aduro Clean Technologies operates in a massive, rapidly evolving market. Its total addressable market exceeds $250 billion, spanning $120 billion in advanced chemical recycling, $50 billion in heavy crude upgrading, and $121 billion in renewable oil conversion. Aduro's mission is ambitious: transform plastic waste and heavy crude into sustainable fuels and chemical feedstocks, tackling one of the planet's most pressing industrial and environmental challenges. In Q1 2026, Aduro reported $44,500 in revenue. At first glance, the number seems minimal, but it reflects the company's early-stage commercialization model. Most revenue comes from one-off evaluation and collaboration projects, which vary depending on customer engagement, timing, and technical requirements. These figures are not representative of mature product revenue. Stream but indicate active pilot testing and technology value. Operational losses were $6.3 million, more than double the previous years to $0.46 million, largely driven by higher non-cash share-based compensation, derivative liability reevaluations, and scaling efforts in research and development. Despite this, adjusted EBITDA improved to $2.25 million from $1.74 million, signaling operational efficiency gains amidst expansion. Aduro's cash position of $15.09 million, up from $6.96 million, is one of the strongest indicators of momentum. This capital enables continued pilot projects, engineering scale-up, and early commercialization efforts. While current earnings appear modest, they reflect a strategic focus on building infrastructure, validating technology, and positioning for long-term market capture, a common pattern for emerging clean tech innovators navigating complex, capital-intensive industries. Aduro Clean Technologies is steadily transforming ambition into tangible milestones. One of the most significant achievements is the successful pilot-scale steam cracking of plastic-derived hydrothermal oil, demonstrating that plastic waste can be converted into usable chemical feed. Achieving this at pilot scale is no small feat. Many clean tech companies struggle to move beyond lab experiments, but Aduro has proven that its technology works under real-world conditions. Adding to this momentum, the company signed a non-binding letter of intent LOI for a demonstration plant site in Europe. This is strategically important. Europe's regulatory environment heavily favors sustainability and circular economy initiatives, and a demo plant is often a prerequisite for commercial deployment. Beyond technical milestones, Aduro continues to scale its organizational infrastructure. Research and development efforts are intensifying, with new hires supporting technology, scale-up, pilot programs, and engineering projects. The Nasdaq listing in November 2024 further strengthens Aduro's credibility, visibility, and access to capital, enabling continued investment in commercialization. Taken together, these developments position Aduro to move from experimental projects to market-ready solutions, bridging the gap between environmental innovation and commercial adoption. While risks remain, the company's trajectory illustrates how early-stage clean tech can steadily build operational, regulatory, and commercial momentum in pursuit of a multi-billion-dollar opportunity. Both Everspin and Aduro carry distinct risk profiles that investors must weigh carefully. Everspin Technologies, while operating in a specialized and high-demand Mr. AM niche, remains exposed to the cyclical nature of the semiconductor industry. Licensing revenue can fluctuate based on contract timing, and competition from traditional memory providers and emerging technologies could pressure margins. Heavy reliance on aerospace, defense, and automotive markets also creates vulnerability if demand slows or budgets tighten. Aduro Clean Technologies, by contrast, faces higher uncertainty. Its business depends on successful pilot projects, scaling technology, and regulatory approval, with commercialization timelines often extending over several years. Heavy R&D expenditures and early-stage operations increase the likelihood of operational setbacks, while competition from other recycling and sustainable fuel technologies adds further pressure. In short, Everspin offers relative stability with moderate risk, whereas Aduro presents high-risk, high-reward potential, requiring patience and a long-term perspective. Understanding these nuances is key to framing opportunity versus risk. For investors, these two companies appeal to very different mindsets. Everspin Technologies suits those seeking exposure to a specialized, mission-critical semiconductor niche with predictable product revenue and steady growth, particularly in aerospace, defense, and industrial sectors. Key milestones to watch include Persist MRAM adoption, FPGA integrations with Lattice Semiconductor, and RISC-V expansions with Aduro Clean Technologies. Meanwhile, attracts investors with a higher risk tolerance and a long-term vision for environmental innovation. Success depends on pilot and demonstration plant outcomes, R&D progress, and eventual market commercialization. The $250 billion total addressable market offers enormous potential, but revenue and profitability remain volatile in the short term. Ultimately, Everspin and Aduro tell a story of two paths toward the future, one rooted in established technology, the other in bold experimentation. Both offer insight into innovation, growth, and opportunity, but navigating their journeys requires patience, research, and a clear understanding of risk.